How's it going, everyone? It's Sam. You need Bitcoin right now. You do. It's just a fact. You need to have some Bitcoin for this next halving. But I don't think this is a time to go out and dollar cost average into Bitcoin. I want to explain why that is. It sounds like an oxymoron, but it's not. I want Bitcoin exposure, but I'm not buying Bitcoin right now. I'll show you the charts why that is. I'll also show you a very important video kind of circulating around the internet right now. If you don't mind, hit subscribe. Turn on the bell notification underneath the video so you can see future videos just like this. I plan on making a video breaking down the numbers behind this, but for now, I just want to show you some charts and some thoughts behind what I'm talking about. And to be clear, I'm not bearish on Bitcoin. I actually think it's going to do quite well, but that doesn't mean that I'm going to keep on buying it forever, right? I plan on holding it forever, but this might not be the best time to continue to dollar cost average and moving forward. And I'll explain why that is. And I hope you can stay through to that because I know I'll get a lot of hate comments, people saying that this is clickbait, but it's not. I just want to show you my updated plan on this bull market. And this isn't saying that I'm not going to buy anything in the future, but dollar cost averaging, I think, is much less effective now than it has been up to this point. Again, if you don't mind, hit subscribe. There's also going to be a link to MargeX underneath the video in case you want to start trading crypto. You can trade over on MargeX, including Bitcoin on low leverage, which is something that I'll talk about in this video. But I'll also cover it in the future video where I break down these numbers on dollar cost averaging during a bull market. So what's the problem? Well, the problem is a lot of people don't have wealth. They feel like they're left out of holding assets. Let me play this video for you from MSNBC, and then I'll explain why, if you're looking at buying crypto right now, if you're looking at buying Bitcoin specifically, you really have to pay attention to what's happening right now. It might not be the best option forward. Let me play this video though for you.
For the first time in our nation's history, a 30-year-old man or woman isn't doing as well as his or her parents were at 30. That is the social compact breaking down. People aged 30 to 34, 60% of them in 1990 had one child. Now it's 27%. People are opting out of America. They're not optimistic about it. They're not having kids. Young people aren't having sex. They're not meeting. They're not mating. The pool of emotionally and economically viable men shrinks every day, which lessens household formation. So we have a real issue. Young people are enraged. So it turns every cut, every movement into an opportunistic infection because, quite frankly, they are just pissed off. They look up, they see wealth, exceptional wealth across my generation and people in certain industries, and they are really struggling. Their purchasing power is going down, and the incumbents create artificial scarcity on campus. We take pride in rejecting 90% of our applicants, so the incumbents who already have a degree see the degree go up in value. We get very concerned with housing and traffic once we own the housing. Housing permits are sequestered from young people. Housing prices have gone from $290 to $420 in the last 4 years. So a young person, a house, stocks that I don't own skyrocket in value. Let's have COVID relief and flush the markets and take assets way up, because if 1 million people dying would be bad, would be tragic if I got less wealthy. And we're doing it on their credit card. Young people have every reason to be enraged, and every issue they see, they look up, they get angry, and they see someone doing better than them. And then every day it is speedballed in their face that they are failing, that they are not doing as well as everyone around them. We have lost the script. Our kids are more anxious and more depressed and more obese and more addicted. And we have made a purposeful decision to let this happen by ensuring that people around this table stay wealthy at the cost of young people.
Now, I will say, I think a lot of that rings true. It's very difficult for younger people to feel wealthy in today's day and age, to gain wealth. Everything's becoming exponentially more expensive. So they have less money to invest, and all the assets are becoming exponentially more expensive as well. So they can buy less of what they actually are able to save. I think that's been the case over time, but it seems like it's more relevant now than ever. That being said, Bitcoin is the way out. Bitcoin is one of the first assets that you could buy before the large institutions, before the really wealthy people could really get a hold of it and felt comfortable with it. And we've seen that. The problem is a lot of people try to FUD you out of your investments. Now, I'm not here to do that today, but I will say I think the game has changed a little bit. This is something that I planned on doing, and I'm implementing it. The hard thing about a bull run is keeping your head on straight, making sure you stay comfortable and implement the plan that you made during the bear market, because that's when you have a level head. Now, if you dollar cost average Bitcoin over time, you do quite well. Let's say you started towards the peak of the last, two bull markets ago, the 2017 bull market, and you added $100 a week to your investment portfolio for about 6.5 years. Well, you have spent about $33,000 and you acquired 2.67 Bitcoin worth about $173,000. This would be a 422% return, or a 5x on your money. That's a really good return. But there's a time and place for dollar cost averaging in my mind. Unless you just want to say, hey, I don't care, for the next 10 years, I'm dollar cost averaging every single week. But if you're trying to play the cycles, this is the time where you want to be invested in cryptocurrency, where you just want to sit back. But this isn't necessarily the time, I think, to be investing in cryptocurrency, at least dollar cost averaging. There are times that I think it's important to buy or trade right now, but dollar cost averaging a big asset like Bitcoin is something that I'm not going to do moving forward right now. And if price comes down significantly, I might change my mind on that. But I want to explain why that is. But first, a word from Exverse. Okay, now one crypto that I'm also watching is Exverse. Now, Exverse is an AI-powered first-person shooter game built on Unreal Engine 5, incubated by BYDFI and KuCoin Labs, and powered by Immutable. So a lot of big names here. You can see 144 followers, a lot of people that I follow as well. Now, it's a new first-person shooter that is launching in April by, as I said, BYDFI, ChainGPT, GameFi, and in the next 24 hours, actually, probably by the time you're watching this, probably right around the time you're watching it, they launched on Bybit, Mexi, Gate, and PancakeSwap. So, I mean, these are some of the biggest names out there. I plan on holding some of this token. I think that it's got a lot of big names behind it. Could do quite well during this bull run. Of course, not financial advice, and they are a partner of the channel, so make sure you do your own research. But they're redefining that first-person shooter landscape as one of the first live Web3 games, already drawing in over 100,000 signups, and they also have an $80,000 prize tournament, which not a lot of cryptos can say. Thank you to Exverse for being a partner of the channel, and definitely go check out their links underneath the video. Now, Exverse is also trading now on Bybit and Gate.io and Mexi, so you can go check them out. But let's talk about why it might not be the smartest decision to dollar cost average right now. And this sounds weird because Plan B says buying 6 months before the halving and selling 18 months after the halving will outperform buy and hold. This has been the case for a long time. You can see why by looking at this rational root chart. If you're just listening, I would suggest actually watching for a moment. This is the Bitcoin halving, or these are the Bitcoin halvings. This is a circular chart where time goes in a circle. So a whole rotation of the chart is about 4 years. It's one Bitcoin halving. So what's that mean? Well, each quadrant is about 1 year. What do you notice? About 18 months after the halving, we peak. And then about 1 year after that, we bottom. Historically, that's been what's happening. So Plan B says, okay, buy 6 months before the halving and sell 18 months after the halving. So buy here, sell here. Now, this isn't the exact bottom, but I think it's just because then we know that the bottom has happened and you don't have to hold on to Bitcoin for a year when it's just kind of ranging sideways. So I'm assuming that's why he says this is the 2-year period you want to hold for. Now, the problem with dollar cost averaging now, after the halving, is this is typically when we see high prices, right? You're dollar cost averaging as we move up, which means that your money doesn't go quite as far. I'm going to break this down in another video, an alternative to this. But let's say you start buying now at 65,000 and you buy until 185,000 15 months from now. Okay, let's say you put in $1,000 each of these 15 months. Your Bitcoin value, if Bitcoin goes up to 185,000, would be about 28,000. Now, the price of Bitcoin has 3x or gone up 200%, but your return is only about 80 8%, 89%, because you're dollar cost averaging the price up. Now, the other hard part is if you're dollar cost averaging over the next year and a half, it's going to feel quite weird to go from buying Bitcoin to all of a sudden selling it at one time. Unless you want to just hold throughout the bear market, it's kind of odd to be buying and then 1 week later, like sell your entire bag. What I'm doing is a bit different. So I use this entire time since the last bull market to dollar cost average. I bought all the way down to the bottom, and I continue to buy. I continue to accumulate up until now. Right now is when I am not accumulating any more Bitcoin. So I'm done for now. I've grown to have a very large bag of Bitcoin. It's a large portion of my net worth. Now I sit for a few months, and then I'm going to start dollar cost averaging out. I'm going to dollar cost average out up until about the historic peak. I'm still going to hold some Bitcoin, but I plan on dollar cost averaging out of part of my bag, about 50% of it. Why is that? Well, I'm going to be selling all the way up because I don't know when the exact peak is. And if I dollar cost average out starting in a few months, yes, I'm going to be selling much before the ultimate peak in Bitcoin, but it'll give me that muscle memory to continue to dollar cost average out when I feel euphoric, when the market's peaking. And I'll probably hold that cash until the bear market to redeploy either into Bitcoin or into other assets. Now, I'm still going to be holding some of my Bitcoin, to be clear, and I'm still going to be buying some assets. The reason for that is Bitcoin might go up, 2, 3, 4x, but some altcoins are going to go up 100x. So yes, I'm going to be winding down the Bitcoin purchases, but there's still going to be altcoins I think have a lot of potential. Short term, they're going to be higher risk. I'm also going to be trading still, but I'm taking a step back from dollar cost averaging. And I've seen other people talk about this too. I was already planning on doing this and making a video about it, but you can see Digital Asset News made a video, time to stop regular DCAing Bitcoin post-halving. And again, it's not me being bearish. It's just a question of, okay, do you want to be dollar cost averaging during the bottom of the market, or do you want to be dollar cost averaging near the tops of the market? Now, there's still going to be people that want a dollar cost average, and I get that. If you have not made a big enough allocation towards Bitcoin, if you don't have your Bitcoin goal yet, let's say you want to get to one Bitcoin and you're at 0.89 or something, I get trying to get to that goal. I'm not saying you shouldn't. Even if you invest right now and we move up to 180,000, right? Even if we do that, okay, you made a 3x. That's a great return. So I'm not necessarily saying now specifically is not a good time to be buying Bitcoin, but dollar cost averaging for the next 18 months, 15 months, probably isn't the best plan if you're someone that's trying to play the cycles. Of course, not everyone is. Some people are just going to continue to dollar cost average no matter what. But this is a time to cash up, in my opinion. I've been dollar cost averaging, buying quite heavy over the last 3 years. And now I'm okay just leaning back and watching the market do its thing. Now, if we fall down significantly, I will probably dollar cost average again. If we fall down to previous support levels, let's say Bitcoin all of a sudden goes down to 59,000, I'll probably put in a long and see if I can't, get a nice leverage trade. If we see some big token drop or some altcoin that I'm very bullish on, I'll still buy that. I'm not saying I'm not buying crypto anymore. I'm just saying regular DCAs don't always make sense in a raging bull market. Let me know your thoughts though underneath the video. Am I crazy? Hopefully I don't get too much flack for this. I think it makes sense. It should make sense to a lot of people, especially if you've been around the market for a long time. You buy low and you sell high. And there's a gray area in between, which is where you have to make the tough decision. But let me know your thoughts. Check out the links underneath the video to Margex. I plan on making another video here soon talking about trading during markets like this. If you want that, let me know in the comment section. Thank you so much. I appreciate it. I will see you in the next video.